So today we'll be going over this incredibly cheap platinum and nickel mine in Canada. The company is Nickel Creek Platinum, and currently they're on the TSX trading at about 9.5 cents. So who are they? They have a large platinum, palladium, nickel, copper, and cobalt deposit in the Yukon of Canada. Currently their market cap is around 39 million. They are at the stage of defining the resource estimate. They did complete a preliminary economic assessment in 2015, but that would definitely need to be updated. They seem to have a high turnover rate in the CEO position, and I believe the new CEO was just installed in December of last year. They recently raised $3.2 million at 9 cents per share with a 5-year warrant that could be exercised at 15 cents per share. Previous capital raises have been at about 5 cents per share. So if we go to the deposit value here, so we have cobalt, which is about 107 million ounces, or million pounds, I believe, actually. And so we go look through the numbers here. It's like we've got, it's primarily nickel and palladium that we've got here for our deposit. We've got 3.6 million ounces of palladium, 3.5 million ounces of platinum, a little bit of gold, and a fair bit of nickel. So 2.6 billion pounds of nickel and 1.5 billion pounds of copper. So if we look at the total resource, like the whole total deposit size, it's $54 billion. And this gives a resource value divided by market cap of $1,300.96. And this is extremely attractive. So probably the closest comparison that I've come up with so far is Generation Mining, and they're over in Ontario, and I've done a video before on them. And we kind of look at the resources. Nickel Creek's got more gold. They don't have any silver. I'm not sure if that's because there's none in the assay or they just didn't include it in the numbers. Copper, they've got about twice as much copper here. Platinum, we've got probably about 4 times as much platinum. Palladium's relatively similar. Then we've got this huge amount of nickel and the bit of cobalt here. And this is actually priced in dollars. So we times like the amount in reserve times the dollar, and that gave me a more uniform graph. And so Nickel Creek, I believe, owns 100% of their deposit, where Generation Mining is currently 80% ownership. And it could be that Sibanye-Stillwater comes back and buys in 30% of the ownership back. But Generation Mining is a lot further down the line. They've completed both the preliminary economic assessment as well as the feasibility study, and they're basically looking to go into construction. They're actually partners with Sibanye-Stillwater in this project, so I don't think it should be that hard to get funding for it. They're also in Ontario versus the Yukon. I'd probably rather be doing business in Ontario than I would be in the Yukon for mining. It just makes it easier to do it year-round. But there's just a significant difference in the value that we've got $1,396 of resources for every dollar invested in Nickel Creek right now, whereas you're getting about $99 for every dollar invested in Generation Mining right now. So I think they're both bigger companies, but it just looks like Nickel Creek is a standout buy right now. So here's we have some comparison to the juniors. So we already went over Nickel Creek versus Generation, but then we have Platinum Group Metals, which is $157 for every dollar that you invest is what you get for resources. We have Northern Dynasty at $2,313. So Northern Dynasty is definitely very attractive in values, but it's also they're kind of a target of a lot of political issues. So I'd say it's a lot harder for Northern Dynasty to get their mine into production than it is for any of these other companies. Goldex, which is currently being bought out by Gran Colombia, is $118 per ounce. And then Giga Metals, this is a company I actually found out about by going through Nickel Creek's corporate presentation. And they actually have a massive nickel deposit in northern BC that's pretty marginal at today's prices, but if nickel rises, it's just an absolutely massive resource. So it would be $3,689 per dollar invested for resource. So then I compare Nickel Creek Platinum to some of the majors, and just looking mostly at comparing their resources divided by our market cap. And we see that this provides significant value for all of these companies, that if they were able to buy this company at today's prices and you mean turned into a mine, all that kind of stuff, you're basically getting like 10 to 20 times your value of current what your price of your company is, and the price of the cost of capital and stuff like that. And it's really attractive compared to like these gold miners where they really don't have a lot of reserves and they're going to have to load up on companies. But it's just, yeah, it provides tremendous value compared to these companies. And then here I went through and created a steady state production estimate revenue. And most of my numbers went off their preliminary economic assessment from 2015 of just kind of what they could produce each year. And they also said in there that they had about 10 to 13% of exotic PGMs. So I basically I did 10% of kind of what they're producing per year in PGMs, and then basically just kind of did that on a split of rhodium, ruthenium, and iridium based on what Impala was producing. I'm not sure if the metallurgy is going to be the same as what Impala does, but it kind of seemed like a good place for me to start just to get an idea of what's going on. So we're getting significant amounts of money here. The copper is about $250 million a year. The rhodium is about $191 million a year. The palladium, $730 million a year. Nickel, $730 million a year. So we're looking at very substantial revenues coming in here. So we're looking at about $2 billion in revenue per year at steady state production. Obviously, they're going to be a very long time away from steady state production. That might be 10 years down the road. But it's like this mine, like the economics seem to make tremendous sense if, like, you mean we're actually getting this kind of production. Then we go on to the costs. And I basically doubled the costs, at least for the PGM production. I think their number was somewhere around like $385 per ounce, and that just seems absurdly low to me. So I basically just doubled it, and this got me more in line where generation mining is. And maybe it needs to be higher, I'm not sure. And then I used their all-in sustaining cost for nickel, which is $5.78. And maybe this needs to be higher too. It's just tough to say because they just haven't put out a lot of resources on it. But I want to get an idea of just what's going on here. So I have a total cost of about $600 million a year. So basically, they're making $2 billion a year. Their cost would be about $600 billion a year. The development cost of the project, again, I believe I just took the original development number and just times it by 2. Because it was around like 400, 500, 600 million, somewhere in there, and then just doubled it. And this seemed, again, more in line with what generation mining's cost to develop was closer to. And so what we have here is annual earnings of $1.4 billion, $1.5 billion. And it's like, let's say the project costs $1.2 billion to produce it, like to build the mine. It's like you're basically getting paid back within a year, and then have that potential to make this $1.5 billion going forward. And I can't remember if it was 22 years. I think that's about the time that they're looking for the production life of this mine. So it just seemed absolutely fantastic to me. Like it seems a good proposition. So yeah, Nickel Creek seems like a fantastic speculative investment. Has a larger deposit than generation mining, and it's like about 75% cheaper. But I still like generation mining. I think they both have a role into play. I believe it'll take about 2 to 4 years for them to get to the feasibility study, and they were likely waiting on higher nickel prices to make all this work. They also get the 10 to 13% bump in exotic PGM content, what I talked about before. It definitely seems like they're on the lower end of the trading range right now. I think it was closer to 20 cents earlier in the year, and now it's around 10 cents, and they just had a private placement again at 9 cents. And so it seems like a good deal to me. This would be ideal if you could get into a private placement and get some free warrants on that, because they're going to have to be doing lots of financing probably over the next 2 years. Because right now they're still drilling out, but I think that to fund the research and to fund the reports, they're probably going to need a fair bit more money. So there's lots of potential to get in for accredited investors to get a private placement. The company itself seems to have been very quiet over the last few months. I couldn't find a webcast about them doing their results. All I could really find was a corporate presentation and some listings about the private placements that they've done. So it kind of a little disconcerting that they're not really talking with the general audience about what's going on. But I think the new CEO just came in December, and so maybe he's trying to get his bearings about what's going on before going out to the market. So this is my first look through the company. A lot of the details are quite rough rough for me. Like I just haven't quite got a full grasp on like the pulse of what's going on with this company. I'd definitely like to hear some more current interviews with the management about what's happening. I also plan to update my presentations in the future as I get a better understanding of the project. It looks very interesting, but I'm by no means an expert on it. And if you have any additional insights about this company, please leave a comment below. I'd love to hear it. And this was actually one of my viewers recommended this company that I check out, and it was a fantastic recommendation. And so I'm looking forward to getting more of those in the future. Thanks for watching.